Today, we're looking at 5 companies operating at the heart of the industrial robotics layer of the robot age. Unlike humanoid robots, which are still in the early stages of adoption, these companies are already deploying robotic systems across factories, warehouses, and hospitals around the world. We'll cover FANUC, ABB, Rockwell Automation, Teradyne, and Intuitive Surgical, and examine how each company is helping automate real-world tasks today. Together, they provide a glimpse into what the robot age looks like before humanoid robots become mainstream. Let's start with FANUC. FANUY, FANUC Corporation, is one of the world's leading industrial robotics and factory automation companies. The company manufactures robotic arms, CNC control systems, and automation solutions that are used across manufacturing facilities worldwide. As factories continue to automate production and address labor shortages, FANUC is positioned as one of the key beneficiaries of the long-term industrial robotics trend. Let's move to the chart. From a technical perspective, the stock remained in a prolonged downtrend following its early 2021 peak during the post-pandemic market boom. The decline continued until March 2025, when the stock reached a low near $10 per share, representing a drawdown of approximately 62% from its highs. From that point, FANUY began a gradual recovery and, in December 2025, successfully broke above the 18.8 TER resistance level, a price zone that had acted as a major historical ceiling for several years. Following the breakout, the stock advanced roughly 20% before returning to retest the newly established support area. In April 2026, momentum accelerated again, driving the stock nearly 70% higher as buyers stepped back into the market. Since then, the stock has undergone a healthy correction of approximately 25% and is currently trading in the $20–$22 range. Looking ahead, we view the zone between 18.8 and 28.3 as the key long-term trading range. A decisive breakout above the upper boundary could signal the continuation of the broader uptrend and open the door to significantly higher prices. For shorter-term traders, the $23 level remains an important reference point for monitoring momentum and market direction. It is important to note that FANUC is not a speculative humanoid robotics company. Instead, it is a mature industrial automation leader whose performance is tied to real-world factory investment, manufacturing activity, and global capital spending. As a result, the stock tends to be influenced not only by robotics adoption, but also by broader industrial and economic cycles. Next, let's move to ABB. ABB is one of the world's leading industrial automation and robotics companies, providing technologies that help factories, warehouses, and industrial facilities become more efficient and increasingly automated. Unlike some of the more speculative companies in this video, ABB operates an established global business with decades of experience in automation, electrification, and industrial robotics. As industries continue to adopt robotics and intelligent automation systems, ABB is positioned as one of the key infrastructure providers behind the broader robot age trend. Now let's turn to the chart. Looking at the weekly chart, ABB has demonstrated impressive technical strength over the past several years. In March 2024, the stock successfully broke above the 4620 level, a major resistance area that had previously capped price advances. Since that breakout, shares have repeatedly returned to test the level, yet buyers have consistently stepped in to defend the zone and maintain the longer-term uptrend. One of the strongest examples occurred in January 2026, when the stock once again approached support before launching a powerful rally of roughly 70%. From a technical perspective, the stock is currently trading within a broad range between approximately 50,800 and 7,800. This range now represents the key battleground between buyers and sellers. A successful breakout above the upper boundary could signal the next phase of the long-term uptrend, potentially supported by continued adoption of robotics, automation, and industrial AI technologies. On the other hand, Broader market weakness or negative developments within the sector could push the stock back toward the major support zone near 4620, which remains the most important long-term accumulation area on the chart. Let's look at Rockwell Automation. Rockwell Automation provides the software, control systems, and intelligent devices that help modern factories operate with increasing levels of automation. While companies like Tesla focus on building robots, Rockwell focuses on the environment where those robots will eventually work. As factories become more automated and connected, Rockwell is positioned to benefit from the long-term growth of industrial automation and intelligent manufacturing. Now let's turn to the chart. Rockwell delivered an important technical breakout in October 2025 when the stock finally moved above the $350 level. This area had acted as a major resistance zone for years, repeatedly preventing the stock from reaching new highs. Following the breakout, shares advanced approximately 25% before pulling back to retest the former resistance level. Importantly, buyers successfully defended the area, transforming resistance into support and confirming the breakout. After that successful retest, the stock resumed its advance and climbed another 35%, reaching the $470 region where it trades today. From a technical perspective, the overall structure remains constructive. As long as the broader automation and robotics trends continue to develop, investors can argue that the long-term uptrend remains intact. However, if a broader market correction occurs, the most important level to watch remains the $350 area. That zone now represents the key support level and the defining technical landmark on the chart. The next stock, TER, Teradyne, occupies a unique position in the robot age ecosystem. Through its ownership of Universal Robots, one of the world's leading collaborative robotics companies, Teradyne provides automation solutions that allow humans and robots to work side by side in factories and logistics environments. At the same time, the company benefits from growing demand for semiconductor testing equipment, making it a direct beneficiary of both the AI and automation trends. Unlike some of the more mature industrial automation companies in this series, Teradyne has recently attracted significant investor attention due to its exposure to several high-growth themes, including AI infrastructure, collaborative robotics, and advanced semiconductor manufacturing. As a result, the stock has become more momentum-driven and sensitive to investor sentiment. From a technical perspective, the stock has delivered an exceptional performance, rising approximately 540% since March 2025 and currently trading near its all-time highs. Following such a strong advance, the stock appears stretched relative to its historical averages and could be vulnerable to periods of profit-taking or market volatility. We identify the $263 level as a potential support zone in the event of a normal correction driven by weaker market sentiment or reduced investor enthusiasm. In a more severe market-wide pullback, the stock could potentially revisit the $160 area, highlighting the higher volatility often associated with fast-moving growth stocks. On the upside, we would like to see the stock establish support around the $325 level before attempting another leg higher. Such a development would indicate that buyers remain in control and that the broader uptrend remains intact. While the long-term outlook for robotics and automation remains attractive, the current price level presents a more challenging risk-reward profile. Investors considering a new position may prefer to wait for either a period of consolidation or a meaningful pullback before committing capital. The last one, ISRG, Intuitive Surgical, is the global leader in robotic-assisted surgery through its widely adopted Da Vinci surgical platform. The company represents one of the most successful real-world applications of robotics, with thousands of systems installed worldwide and millions of procedures performed each year. As hospitals continue to adopt robotic surgery, Intuitive remains one of the clearest examples of robotics creating measurable value today. From a technical perspective, the stock is currently approaching a very interesting area on the chart. In June 2024, ISRG broke above the $400 level for the first time, and has largely maintained its position above this important historical threshold ever since. Following the breakout, the stock advanced more than 50%, eventually reaching a new all-time high in January 2025. Since then, the stock has entered a broad consolidation phase, trading within a range between approximately $400 and $610. Today, with the stock trading near $408, it is once again testing the lower boundary of this range and revisiting a key support area. From a risk-reward perspective, we view this as one of the more attractive technical setups within the industrial robotics group. A successful defense of the $400 support zone could provide a pathway back toward the previous highs, representing roughly 50% upside potential from current levels. Beyond that, a breakout above the historical highs could open the door to a new phase of price discovery, particularly if adoption of robotic technologies continues to accelerate across healthcare systems worldwide. Humanoid robots may capture most of the headlines, but industrial robotics is where automation is already creating real-world value today. From FANUC's robotic arms on factory floors, to ABB and Rockwell Automation's industrial systems, to Teradyne's collaborative robots and Intuitive Surgical's robotic operating rooms, these companies demonstrate that the robot age is not a future concept, it is already transforming industries around the world. If you enjoy this type of analysis and want to learn more about the trends, industries, and companies shaping the future economy, make sure to subscribe to NAVIXA for structured market insights and future episodes of The Robot Age.